Hey there, fellow investors! Welcome back to another video of me. So today I would like to share with you what 5 famous investors have been buying over the last quarter, so between April and June. I find this always really interesting to analyze their stock purchases because it tells you a little bit where their convictions are. Not every stock purchase is of course their largest holding or something like that, but it might tell us a little bit where value is out there in the market. And as we all know, the markets feel really expensive, so I could always use some stock inspiration. So this is what I will show you today. Stay tuned and see you on the inside. So before we go into what the famous investors are actually owning, I also wanted to share with you this little clip that really inspired me to do this. Mohnish Prabai, for the people that don't know him, is an investor that's quite famous in India at the moment. He manages a fund of approximately 600 million and copied the Warren Buffett style. He gives some guest lectures, and this clip is from one of the lectures he gave a while ago, and he really shares here nicely why we should look as individual investors, for instance, to what the famous investors are doing. And I want to share this with you a little bit because he makes a really strong case for this.
A couple of professors in the US, I think one guy is at the University of Nevada, another guy is at Ohio State, and they wrote a paper where they looked at every stock Warren Buffett bought for 30 years, from 1975 to 2005, 30-year period. And what they did is they did an analysis. They said that, okay, if you bought what Buffett bought, and you bought it after it was publicly known that he has bought it, and you bought it on the last day of the month that was publicly known that he had bought it, and you bought it at the high price of the last day of the month. So the highest price it traded on that day, which means that you go and find the worst possible broker on the planet and say, please give me the worst possible price you can get, and I want to buy it at that price. And then you held it till Buffett started selling the stock and it was known publicly that he was selling it. And you sold it on the last day of the month that it was public. And the price you got when you sold it was the lowest price on that last day of the month. And you did this for every stock that he bought and sold for 30 years. If you did that, you beat the index, the S&P 500, by 11.5% a year on average. And the S&P had done about 10% historically, so you were doing about 21.5%.
20.5%. I mean, I know we're dividend investors mainly here, but most of you are also having an angle from value investment point of view, like myself. 21.5% over 30 years is really, really a lot. And effectively what I can tell you is this is what Mohnish Prabai has also been doing. He has a goal of making 26% per year, and he's been quite successful in that so far. So what I will show you now, I will take 5 famous investors, and as a spoiler alert, I will also take the stock from Mohnish Prabai, what he has been buying, and I will run it through my dividend stock screener in case those are also dividend stocks. So what is my dividend stock screener? I will put the link also in the description of this YouTube video. My dividend stock screener you can find on my blog, and what we look here typically at is criteria 1, a dividend yield is more than 2.75%. Criteria 2 is the dividend payout ratio is less than 70%. And criteria 3 is that they have been increasing dividends for at least 5 years. Let's see if any of these investors has a dividend stock that might be interesting for us. If not, we'll still have a chance to look at one of those stocks and see if one of those is attractively valued for us to consider right now. Okay, so let's get started then with the first investor, and this can't be anyone else than Warren Buffett. So to know what Warren Buffett was buying, we only need to look into his 13F. Now, of course, we can go to Berkshire Hathaway Investor Relations and look up the 13F, but what I prefer to do is use the website whalewisdom.com, as you can see here. This website categorizes from all the funds there, all the 13Fs out there, what effectively their holdings are, what they've been buying, what they've been selling. And I find this one of those websites that is really useful for us as, novel investors. You can easily create an account. You get most access. You get access then to most of the information that you need. I have no affiliation with this website. I just like it, and that's why I'm also calling it out. So in this case, Warren Buffett works for Berkshire Hathaway. It's of course his famous investment vehicle. So let's look it up. So here we see the Berkshire Hathaway 13F. And what we can see here in the overview is a summary. It shows you the top buys of the last quarter, the top stocks that they have been selling in the last quarter, and their top holdings. Now, as you can see, Warren Buffett is not so diversified from that point of view because he has more than 40% of his of their investment portfolio into a single stock called Apple, and 15% almost in Bank of America. But the stock that I would like to show you here today is that he owns, or he has been adding most in the last quarter to Kroger. Of course, it wasn't a lot in comparison to his full portfolio, so I think they had a quiet quarter in itself. But you know, Buffett wouldn't have been buying it if he didn't see value in it. So let's look a little bit at Kroger and how his position has been built up. So that's what you can see here. You go to the ticker and you see here how they've been over time building up their position. And this is really interesting. So the yellow line here shows you the shares that they have in their position. And you can see that they've been slowly accumulating every quarter some additional shares and almost tripled their holdings over the last year. And they started really in the end of 2019. At the same time, you can see that the share price has also been growing from around $30 around their first purchase until almost $39 at the moment of their last purchase. So what is it that they like in Kroger? So if you're not familiar with Kroger, Kroger is probably, after Walmart, the largest supermarket chain or the retailer in America. So it's pretty much well known among American people and American investors. I think here over in Europe we have a little bit of less exposure to it. So if we run it through my dividend stock screener, we can see already that it doesn't pass it fully because the dividend yield is below 2.75% yield. But at the same time, what is probably interesting here is that if you look at the PE, the forward PE currently is almost 15. If you look at the actual PE now, I think it's around 23, 24. This has to do with the low PE that they had, probably had some write-offs and such in the last quarter. The dividend per share currently is 84 cents. And 84 cents therefore is easily being paid out of the EPS, out of the earnings, but also out of the cash flow. Well, on Seeking Alpha, they have a really nice dividend tab, and here you can straight away see my other criteria from the stock screener. So the payout ratio is 28%, and the 5-year dividend growth rate is around 12%, and the dividend growth itself is 15 years. So if you would run this through the Chowder rule, this will be above 12. I can see why Buffett likes this. There's still a lot of upside potential for this company, for Kroger. It is trading at a 14 forward PE, which is, in my opinion, really on the low side compared to all the other stocks out there in the market. So I think Kroger, from a screener point of view, I could consider it. It's maybe not on the yield one, but has a really low payout ratio. And with this dividend growth rate, I find this company attractive for further research, which I might do in one of the upcoming weeks. Okay, so let's look at the next investor. The next investor that I'm interested in is good old Ray Dalio. I really like Ray Dalio with the Bridgewater fund. Their performance over the years has been just phenomenal. So I think this is also one of those investors that you want to pay close attention to and track the moves he's making in his acquisitions. So let's look him up. Ray Dalio works for Bridgewater. So let's look up Bridgewater Associates. Here we go. And what we can see here again really quickly is that they have been adding most of their buys in quarter 2 on Danaher. Again, it was rather an addition to their portfolio or addition to their position already, as you can see, because it didn't even change for 1%. But again, they probably think that Danaher is one of these positions that they wanted to expand on. What I found very interesting here is that his top sales is actually the SPDR S&P 500 index. Really interesting. It probably means that he's less bullish on the S&P 500 going forward and is more transferring into value stocks, which we can see here when we look at Johnson & Johnson, Walmart, and Costco. So Danaher is not, of course, the biggest position in his portfolio. That's what we can see here with the S&P 500 index. It's still his biggest position, and at the moment it is still 5.5%. So let's see what they have done with Danaher. It's not his biggest ones, so we can see it here. Danaher, for people that don't know it, Larry Culp was the former CEO who is now CEO of General Electric and is mainly known as an industrial, creating medical, industrial and commercial products and services for the industry effectively. They are big in life sciences, diagnostics and environmental and applied solutions. Since the end of 2020, they have been buying because since then they rapidly increased their position. And with that, also the share price went a bit up, as you can see. So let's take a look at Danaher then to see if it passes my screener. So Danaher currently also pays a dividend of 84 cents, but the yield is very low, as we can see. It's just a meager 0.26%. This is really not a lot for me, and for me this is already a no-go if I look at it from a dividend investing point of view. But hey, I'm not only a dividend investment, I also have 10% of my holdings into growth stocks or undervalued stocks, just for me to nurture my needs as a value investor. So if we look at the forward PE, I find it quite pricey because it's trading at a 34 PE ratio at the moment. So also here, not a lot to like about it from a valuation point of view. So if we go then to the dividends, they have a payout ratio of not even 10%. Their dividend growth rate is 7%, and they have only dividend growth since 4 years. And that's because they recently started paying dividends. So from that point of view, I don't find it attractive as a dividend stock. Maybe as a value stock, it might have more going forward. But if I then see the forward PE being already at 34, I believe that it's not a company that I want to do further research on. I do know that Danaher is a brilliant company, but look at the run-up they had already. Just by the end of the quarter, when that quarter ended, it was still around, as we can see here, 260 to 70, and then it all the way shot up to 320. So I think probably the value has been generated here already by the recent run-up. So, interesting company, but I think Ray Dalio made his money already on this, and I wouldn't be surprised to see if he doesn't add any further during this quarter, or if he even slims down. Let's see, we will know that in probably in October. So the third 13F that I would like to look at then is from Kevin O'Leary. Who doesn't know Kevin O'Leary from Shark Tank? He calls himself a dividend investor. He even has an ETF which is fully focused on dividends. So I like this guy. I like him. I like following him. He's the one that always advertises a frugal lifestyle, and that I would say it really fits with me. So he has a company called I think it's Oshares. Let's see what we get here. Oshares Investment Advisors. And yes, this is what is from Kevin O'Leary. So what we can see here is that they have been adding most of the stocks to Eli Lilly, which is a pharmaceutical company that we can also look into, and their top sells have been Amazon. So these are again not big movements, I guess rather trimming a little bit on the tech stocks here and investing a little bit in other companies. I can't even call these value companies. If we look at this top holdings, top 4, Microsoft, Home Depot, I would argue that this is a really well diversified portfolio from Kevin O'Leary. So if we then go to Lilly, let's see what he has added to. Then we can see it here. So they added a little bit, and the biggest position went from 1% to 1.2%. So Lilly here, it's a company they have been adding to gradually over time, even a little bit decline last year in the summer, but since then they have purchased back again and relatively flat over time. So from that point of view, the share price has also been recently running up, but let's have a look also what it says in our stock screener. So over here, the yield is 1.3%. Okay, let's not take this straight away at the moment as something to kill the whole idea from. They pay out a dividend of $3.40 on a stock price of $260. And their forward PE is also 33. You know, this is an issue that I have at the moment. Everything is so expensive, and for me already a stock price of 33 means it needs to have such a high growth. But I know Eli Lilly a bit. I don't see this happening anytime soon. So I thus consider this as a company that is already overvalued based on these metrics. Let's also have a quick look at their dividends, dividend history. So payout ratio of 43%, which is really nice. A dividend growth of 10% and a dividend growth track record of 7 years. So if we add these two, it's almost passing the Chowder rule of 12, which is for me a good thing. But just based on the price to earnings, I find it too expensive. So if we look at Kevin O'Leary, just like Ray Dalio, they have been adding a little bit to certain stocks, but I think they've been just accumulating a little bit. These are not the big bets that these two investors have been making, and it's not something that I would copy anytime soon in my portfolio. Okay, so then we have two investors left. Let's also have a look at Bill Ackman. Who doesn't know Bill Ackman, who last year made a really big bet just before the pandemic started? He was scaring the hell out of all people, and then once that happened, he made a really big gain on the downturn and the decline that came. And he just, I think, made 2 or 3 billion in a 2 weeks period. And for me, it was a bit dubious what he did, but you gotta give it. This guy is really always having a lot of performance. Yes, he also has some hits and some misses. What I like about this style of investing is he takes large ownerships into companies, and with that he tries to get a seat at the board, and from there wants to implement changes to create more shareholder value from those companies. So let's have a look at what Bill Ackman has been buying. So Bill Ackman is part of his investment vehicle, which is called Pershing Square. And his 13F here shows that there's one stock that they've been adding to, and that's Domino's Pizza, and the change is 1.7%. He has been selling Lowe's companies, restaurant brands, and Hilton Worldwide, but those are more thrilling. I would say Lowe's is quite a significant, but as you can see, it was also his biggest holding. So his biggest holdings are Lowe's, Agilent, I don't know this company, but also Chipotle Mexican Grill, a company that I could have bought once at $150, and look at where it is now. I think last time I checked it was a $600, so I really missed out on that one. And then Hilton, again, a quite concentrated portfolio, so it's not a large portfolio, as you can see. I would say the less concentration those investors have, the more upward risk or upward rewards they might have. It's not my style of investing because I don't know this company too well that I have in my portfolio, like as they can do their due diligence. But okay, still, you know, what we can see here from Domino's Pizzas is that it's one of their smallest positions. And although the graph shows different, they are around 2 million shares and they've been accumulating a little bit all the time. So from that point of view, it's really a small change. Stock price has been appreciating really nicely. It went from around $367 here to $466. So something tells me again that I will probably have to pass on this. But let's do our due diligence here. So from that point of view, it does pay a dividend. The dividend rate is $3.76 and the yield is 70, even less than 1%, let's say. What I also don't like here again is the PE ratio, 38 almost, so this turns me off already. But let's also have a quick look at their dividends. So from a dividend point of view, they have a payout ratio of 28%. Doesn't surprise me when the yield is also so low compared with the with the PE, because you can inadvertently calculate it back from there. But the dividend growth rate has been stunning with 20%. So it's definitely meeting the Chowder rule numbers. I think even Chowder says like if it's less than 1.5%, you should see a dividend growth of 15%. So over time, if Domino's Pizza stays growing like this and they can keep up this dividend growth rate, actually it might even not be a too bad purchase based on a yield point of view, because the dividend is supposed to grow much quicker if they will continue this growth rate. And they have now a dividend growth of 8 years. So knowing that the forward PE is around 38 already, it really doesn't pass my screener and I would stop here. So if we look at it now so far, Warren Buffett, Kroger is the only one that I've been interested in to do more homework from all these famous investors. But hey, we have one less. Let's look now at the person who introduced this whole video to us, and that we should just copy the most important trades that the famous investors are doing, with the example that he gave from Buffett. What has he been buying himself this quarter? So his name is Mohnish Prabai, and his company, or the 13F that he reports, is under Dalal Street. So you can find it just either via his name or using this holding company. And what we can see here is that his top buy has been Alibaba. Well, that should not come as a surprise to many people in the sense of that know him, because he's been talking about Alibaba before. But what I want to show you is how concentrated this person is. So Mohnish, again, he's making more than 26%. He usually owns 2 or 3 stocks, 4 stocks, maybe 8 or 10 was the biggest that I've seen in his recent history. He usually also buys only 1, 2, 3 stocks in a given year. He's this guy that really likes to just rest, sleep, read a little bit, study some companies. That's the life that he's living. And at the same time, he's managing $600 million in his fund. So his biggest position is Micron Technologies, and that is a position of 47% of his portfolio. But you need to know he's been trimming down a little bit also over the year, because he owned almost 100% of this in his portfolio, like I think 1.5 years ago. So he's really bullish on this one, but he has been trimming a bit lately. But if we then look at Alibaba here, so we can see here that he has been really building up his position. So it went from a portfolio size from 15 to 22, and he has an estimated average price of around $226, which is really, really interesting, because I believe if we look at the shares now that are in the low 160s, high 150, that he made a big decline on this. And there is a video from him where he's saying that he has this thing, and I have the same. Every time I buy, stocks prices go down. He has exactly the same, and he was mentioning that. And well, he's got it because it went down with more than $60. So I will be really curious to see what he has done with Alibaba, if he's been doubling down on this or not, whether he takes the Chinese risk into consideration. But if we would go to Alibaba, we know it's a non-dividend paying stock, but I just want to call out that the forward PE at the moment is 16%. I know their revenue has been growing last quarter with a year-over-year growth of 34%. For me, it's really, really clear that this is a company that's heavily undervalued now. I might do some more research on this. I mean, I've done my research, but in the sense of sharing it with you, I own Alibaba. I can tell you I've been doubling down. And here you can see all the trades that I've been making. So I stepped into Alibaba on 25 December 2020, and I bought 6 shares at 230. After that, you can see I've been adding a few more, around $207, around $210, because for me at that time they were already undervalued. Now, when the stock started to drop in August, I bought another 5 at 182. I didn't want to catch a falling knife with a full position, so I kept on adding a little bit, $4 again at 175, and another $4 at 162. If it goes to the low 150, I might buy another 5 to 10 actually shares. We'll see. It's now at a 2/3 position of me, and what that means for such a value stock, it's now around 5,500 euro, and I can still do probably 2,000 euro, and then I'll call it a day for a value play like Alibaba. It's not a company for me that I want to own forever. I believe that it's somewhere valued around $230 and $240 if I discount the Chinese risk on top of it. I don't know if this Chinese risk will effectuate in the upcoming months, but if this Chinese risk is taken out, I believe it can trade and should trade around $300. So for me, this is a value play, like I did with Facebook when it was at $150, $170, like I did with Google when it was at $900. I never sold Facebook and Google because I still believe there's some room left for growth. And the same I have now with Baba. I have got the conviction, and maybe in one of the upcoming videos or an upcoming post, I will share you more about my full analysis. But this is what Mohnish Prabai has been buying, also quite aggressively in Q2. So it's actually the only conviction buy that I've been seeing from all the 5 famous investors, because all the others were more small accumulations of shares. But Mohnish Prabai has been really buying quite a bit in Alibaba. And I'm really curious to see and looking forward what his Q3 is going to be. So having said that, I found it really interesting to analyze what Warren Buffett, Ray Dalio, Kevin O'Leary and Bill Ackman and Mohnish Prabai have been doing. It's very insightful, and I actually kind of like what Mohnish said. You can just copy some of the trades that they are doing. The inspiration that I got out of it today was really Kroger from Warren Buffett. I will really have to do some more analysis about it because it sounds intriguing, even if it doesn't pass my screener from a yield point of view. It has my curiosity from a valuation point of view. And Alibaba, I just mentioned to you, I'm bullish on them and we'll see where it leads me. So far, I've been usually doing well with my value investing approach. So fingers crossed that this is the same here. Okay, so this leads me to conclude and to thank you for staying so far with me until now. If you like this video, don't forget to subscribe or hit the like button. But for now, I'm wishing you a great remainder of the week.